Dear students, I told you I am explaining bank reconciliation statements as 4 modules. So the first one I have explained simple problems without adjustments. Now we are coming to the second explanation when there is an overdraft. You know that when there is an overdraft. See, for example, you know that cash book balance will be always debit balance. But if the firm is spending beyond their cash balance, that meaning balance will come here. That meaning if cash book, they are saying that in the problem it has got an overdraft balance. So here we will write the balance. It will not be here, it will be here. Similarly, you know that passbook balance always it will be credit side. But if they say that they have an overdraft, then the balance will be here. So just the opposite procedure. Usual procedure, last module what you have learned is here cash book balance will be here and passbook balance will be here. Second module, when there is an overdraft, you have to remember that just the opposite side. Balance will shift to just the opposite side. There is no other change. So here, cash book balance overdraft is there, meaning overdrawn. If they are giving in the problem, meaning you have to write the opening balance here. Similarly, if they are saying that bank got an overdraft, then the balance will come here on the debit side. So that is the only difference, and 2 problems I am going to explain. So the first problem is passbook balance of Messrs. Madhu Bookhouse showed an overdraft of rupees 3,38,375. Passbook balance showed an overdraft. Passbook balance will be here actually. So here it will come here 3,78,375. So this is the balance. So this is the only difference you have to remember. Usual balance will be here. When it's overdraft, it will come here. Now, on comparing the passbook with the cash book, following discrepancies were discovered. So first one is firm deposited checks worth 68,250 in the bank on March 27, 2020. Out of this, rupees 23,250 was credited in the passbook only on April 5th, 2001. So 23,250 firm deposited. So this difference you have to write here 23,250. 23,250. Second one is similarly it was found that firm issued checks. Issued checks meaning it will come here worth rupees 88,200 in March 2020. Out of this 28,200 was cashed in March 2020 and 22,500 on 3rd April and rest on April 10, 2020. So this you have to remember that, see, only 28,200 was cashed in March. So the difference 88,200 minus 28,200, 60,000 will come here. 60,000 will come here. It's a cash payment. Now checks amounting to rupees 13,200 were deposited into bank for collection, but there was no corresponding entry in the passbook. Check received is cash received. It will come here 13,200. Now next one is bank collected interest on investments 7,875. So bank 7,875 will come here as per the standing instructions, and also charge 1,125 as bank charges 1125. It will come here 1125. Now you have to remember that there was a wrong credit in the passbook for 37,500. Wrong credit. This is the 37,500. Now you have the passbook balance. Now you have to find the cash book balance. So here it will be plus and here it will be minus. So here you have to remember how we are going to do that. 3,78,375 plus values 60,000, 7,875 plus 37,500 minus these values 23,250. 23,250 plus 13,200 plus 1125. So you will get, so the value will be 4,46,175. So 4,46,175 will be the answer. Now 4,40,000 4,46,175. That will be the answer. Now if you want to do from passbook and cash book entry to passbook, that is also possible. You have to reverse the signs and you have to do that. So you will get the correct answer. So this is one problem. One more problem I want to do. So that I am going to do. So the second problem, on May 31st, 2020, Mr. Vinu's cash book showed an overdraft of 13,000. Cash book overdraft. Cash book balance will be always here. So here it is 13,000. So the balance here 13,000. Now on comparing the passbook, the following discrepancies were found. Checks for rupees 12,000 were issued before 31/5/2020 but have not been presented for payment. Checks issued 12,000. So here checks issued, here it will come 12,000. 12,000 will come here. Next is check received for rupees 22,500 were deposited in the bank but were not credited in the passbook. 22,500. Check received is cash received. So it will come here 22,500. Now dividend collected by bank amounting to rupees 3,750 was entered only in the passbook. It will come here 3750. 3750. Next is bank charged 3,700 as interest for overdraft. It's an expense 3,750. Now and 500 as folio charges. Both are expenses. It will come here. Now entries are shown only in the passbook. Next is rupees 17,000 on account of bill collected by the bank appeared as a credit entry in the passbook. So wrong entry in the passbook 17,000. Now you have to remember that this is minus and this is plus. So how you arrive at the value? 13,000 plus 22,500 plus 3,750 plus 500 minus these values 12,000 plus 3,750 plus 17,000. So the value will be 7,000. So the passbook value as per the cash book will be 7,000. So this is how I want to explain the second module. So the second module we have explained when there is an overdraft in the cash book or in the passbook. So only difference is that the balance position you have to just the opposite. From first module what you have learned, first module if you have learned balance you have to write it in the usual procedure for cash book. It will be here only because if you have cash then only you can spend. So this is the regular cash balance place where we will write the cash balance, and passbook here we will write. But when there is overdraft balance we will write for cash book here and passbook here on the debit side. So that is the only difference, and the method is same. Just by entering the items in the cash book and passbook and following the signs you can do the bank reconciliation statement. So it's a very simple method, and please follow this method and try to get the correct answer and get full marks for that. I want to conclude this module by explaining two topics. These are theory concepts. One is need and importance of bank reconciliation statement, and second one is differences between cash book and passbook. So need and importance of BRS. 7 points are there. BRS can bring out errors that might have committed by mistake or intentionally in the passbook or cash book. See, BRS, you know that we are comparing two statements. One is cash book and one is passbook. So when this statement is prepared to find out the differences in the cash book and passbook. So if one book is making the mistake, somebody is scrutinizing that again. So it's easy to find out the errors and mistakes. Then undue delay in clearing the checks can be brought out. Now it's electronic system. This is not an important thing, but earlier system, manual system, if you are checking that, there will be undue delay in clearing the check. Now it is much better, but still if there is any delay in clearing the check, we can find out from the BRS statement. Next, BRS will act as a moral check for the employees, because this is not only they preparing the statement, somebody is comparing both the statements to find out the differences. So employees will be extra careful while preparing the statement. Now embezzlement of cash can be reduced. Embezzlement is pocketing the money. See, when you are keeping cash, when you are in charge of cash, possibility is there. When you want money for something, you will take money from the official account. So it is not possible. Embezzlement can be reduced to a great extent. Then double entry principles of accuracy of recording the transactions can be verified. So double entry principles, accounting concepts, accounting conventions, debit, credit, everything, whether it's followed properly, we can check. Then errors and frauds can be detected at an early stage. If any error you are committing, we can find out at the early stage. Then BRS explains why there is a difference in cash book and passbook entries on a particular date. See, as I told you, BRS is prepared to find out what is the difference between cash book entries and passbook entries. So this is also possible by preparing the bank reconciliation statement. Now we come to the last topic, that is cash book versus passbook. What are the differences? So first point is party preparing and maintaining the book. Cash book is prepared and maintained by the depositor, whereas passbook is prepared by the banker but in the custody of the depositor. So if a firm is keeping cash book, the firm is keeping the cash book, whereas passbook is maintained by the banker but in the custody of the depositor. Now recording transactions, cash book writes deposits on the debit side and payments on the credit side, whereas passbook is just the reverse. That is how we arrived at the analytical cross method. In the passbook, payments on the debit side and receipts on the credit side we are recording. Now favorable and unfavorable balances. In the case of cash book, debit side balance is favorable and credit balance is unfavorable, whereas in the case of passbook, debit balance is unfavorable and credit balance is favorable. Now continuing with that, check collection and recording. See, in the case of cash book, always when I started from the module, I told that check received is considered as cash received, whereas in the case of passbook or in the case of bank, only when it's collected, it's entered in the passbook. When you are giving for collection, it will not be entered. Banker will record only when it's entered. So I am repeating that cash book, check received is considered as cash received and immediately recorded in the cash book as check is received. They think that check will be honored. It will not be bounced. So with that idea, they will immediately record in the cash book. Whereas in the case of passbook, only after collecting the check, the amount is credited in the passbook. When you are giving a check for collection, banker will never enter it as collected. Only when they will collect the amount. Because when they will, sometimes when the bank will send, there will be there will not be sufficient balance in the account. So the check will bounce. So banker will never take a risk. Only when they collect, they will record in the passbook. Now, then last point is check issued and recorded. So in the case of cash book, check issued is considered as payment, immediate payment and credited immediately. Whereas in the case of passbook, check cleared is debited only after collection, any time during the validity of the check and not on receipt. Only when it's collected, only when it's cleared, then only the entry will come in the passbook. So this is what I want to explain with this module. Two problems we have worked out and the theory also. The need and importance of bank reconciliation statement and the distinction between cash book and passbook we have explained. So please learn this analytical cross method and you can do all the problems on bank reconciliation statement. This is a very simple method and I am giving more problems for you to work out in the description box. So do the problems and be thorough with this method. And feedback you have to give me for valuable and I am thankful for your valuable suggestions. Please subscribe and promote my channel Happy Learning with Dr. Alice Mani. Thank you.